Okay, guys, so we're looking at the S&P 500, which is a potential good long-term buy opportunity for us in the markets. As long as Joe Biden can win the House of Representatives and the Senate, that will set up the stage for a blue wave, they call, of stimulus coming into the US economy that will, of course, help stock markets in the US rally even higher. Now, remember, the stock market is used for investors to express their view on GDP growth. So if the 500 biggest companies in the United States are expected to grow inside an economy which has high levels of spending, then that will mean the S&P 500 will move higher on higher earnings expectations. And we have to look at some of the leading economic indicators that predict GDP growth to get our historical basis on why we expect the economy to grow. So if we look at manufacturing PMI, which is very, very important, it predicts GDP growth with an 85% certainty. And you can see here, when the manufacturing is above the level of 50, we get positive prints of GDP growth. And when we get manufacturing PMI below the level of 50, we get negative prints of GDP growth highlighted here in red. So you can clearly see there's a very strong correlation between the two. And if we move across from ISM manufacturing, and we also look at services PMI, which is the services sector of the economy, then we can clearly see as well that the non-manufacturing index also predicts GDP growth with a very accurate accuracy of 85% as well. As you can clearly see here, when the service sector is below 50, we get negative prints of GDP. When it's above 50, we get positive prints of GDP. So what's important to understand about that is because if we look at ISM manufacturing and GDP growth side by side, if you look at ISM manufacturing and the S&P 500 side by side, you will start to see that the two are very, very closely correlated in terms of, sorry, I'm not sure why this is not showing up on the chart. Okay, that's very strange. Let me just save this and reopen it. I was trying to give you an example. Not sure why that's happened. Give me a sec, guys. Let me just close this down and reopen this spreadsheet. Looks like it's crashed. Okay, so just going to show you guys how much the manufacturing data actually predicts the S&P 500 returns. And you can clearly see how closely correlated the two are and why we must use the manufacturing to predict GDP growth and then how we trade the S&P 500. So again, here we go. You can clearly see that highlighted in blue, we have the S&P 500 year-on-year returns, and highlighted in red, we have the manufacturing PMI. I remember manufacturing PMI predicts GDP growth, and if the economy is predicted to grow, then investors are going to buy the stock market now in anticipation that in a growing economy, the 500 biggest companies will earn more money, so they buy a stock market now in terms of using the S&P 500 as a forward indicator to predict GDP growth. And you can clearly see here how closely the manufacturing and S&P 500 follow each other because, as I said, the manufacturing PMI is used to predict GDP growth, and then investors use the S&P 500 to price in their expectations of growth or contraction in the economy. So at the moment, the manufacturing PMI is above the level of 50. So that's indicating growth in the US economy at the moment over the next 6 to 12 months. If we go to the latest reading, we have manufacturing at 55, above level of 50, and most importantly, new orders, which is seen as a leading economic indicator, and employment is starting to come back towards the level of 50. So if more people are coming into work, as people go back into getting back into their job in the United States, and new orders are coming through, that's indicating that manufacturing is going to continue to expand. And it's the same thing in the services sector. Employment is now starting to grow again. We've got business activity, which is seen as a leading economic indicator, and new orders pointing towards growth. So what that basically means is if Joe Biden does win the presidency and he wins the House and the Senate, that extra stimulus bill that I've been talking about, a huge 1.8 trillion stimulus package, or even more maybe he can push if he gets both chambers of government, then that could really support additional spending in the economy, and then investors are going to buy the stock market now in anticipation that when the public start to spend again, the companies within the 500 index are going to be earning higher profits. And that does point towards a good long-term buy in the US stock market. Now, let's have a look at what happened after 2008. Exactly the same thing happened in 2008. After the financial crash in 2008, look how long the US was on a massive bull market in the stock markets, because again, huge stimulus came from the US government. At that time, it was only it was a huge amount of money. 900 billion was pumped into the economy by the US government. And then you had the central bank doing quantitative easing. And remember, quantitative easing is basically buying financial assets to inflate the prices of stocks, for an example, and that helps to structurally keep the market strong. And that's why you had this huge 10-year bull market in the US. And it's exactly the same what the Federal Reserve has done. Again, buying financial assets, propping up the prices of equities, which is stocks. And it now sets the stage for fiscal support to come along again. And that helps the S&P 500 move to the upside. So again, a really good potential buying opportunity here as well. So interesting setups at the moment. Let's see if Joe Biden does take the House and the Senate. And if he does, then we get an opportunity to be buying the S&P 500 long term. Thank you.